Hey guys, Justin with Deep Dive Stocks here with another data dive. Today we're going to be looking at TSM. All right, let's get started. So TSM is in some rough shape, and we're going to see that today. There's several important things that we're going to point out, and we're also going to look at one of Deep Dive Stock's new and developing tools, the Hedging heat map. And we're going to look at how that can help us understand future price action, or the effects or the influences that future price action might have on it. So, as always, we're going to get started with VoEx. If you haven't, I definitely recommend checking out the video on my channel on VoEx. It just goes over what it does, what it measures, how to read it. But real quick, we see that if the ideal situation is that VoEx is within these two horizontal lines, we see that TSM rarely does that. The area above the top horizontal line is known as the inhibition zone, and you'll notice that usually whenever VoEx spikes into the inhibition zone, the price usually falls, hence the name inhibition zone. Below the bottom horizontal line is the propagation zone. The propagation zone is named that because typically once VoEx falls into the propagation zone, the price typically falls, hence the name propagation zone. So the first thing we notice is that recently most price appreciations on TSM are met with some pretty significant VoEx spikes into the inhibition zone. This tells us that the market isn't really very understanding when TSM rises in price, but rather VoEx we see kind of quickly tries to, whenever it can, fall into the propagation zone, which is telling us that that is where the stock's stability is. The price needs to go lower. And so since about the middle of February, VoEx fell again into the propagation zone, and the price has dropped pretty substantially since. Lately, we see that unfortunately it looks like VoEx is continuing to fall further into the propagation zone, so that's indicative of continued future price declines. We can quantify this VoEx behavior with the snap graphs, and that takes previous VoEx behavior specific to TSM, maps it over 4 time intervals to what the price action did do, and then spits out a nice little model with the predictions for us. The 20 trading day or the 1 month is showing us negative anticipated price action, and we can tell because the crosshairs are below the gold line. Same with the 10 trading days or the 2 weeks, and again the crosshairs are below the gold line, so we know it's negative anticipatory price action. 5 days or the 1 trading week is again below the gold line, so negative returns. And again on the 1 day for Monday, we have negative returns anticipated as well. These are on average about 70% correct market-wide. I also have a new video on the snap graphs on my channel if you want. I definitely recommend taking a look. It goes into the research, the data behind them, how they were formed, and about what all these squiggly lines and dots are. Moving on to the expected price range graph, this is calculated from implied volatility, and it gives us the 68% probability price range for TSM. And this is helpful because it can help us understand if a stock is kind of well behaved or if it kind of moves way more than the market is expecting in either direction. And we see that on the whole, TSM is relatively well behaved. It does seem that when it does drop, it typically does drop more than the expected price is anticipating. And most might think that that's common, but really it's not. Most stocks that are kind of just gradually going down will kind of just hug the lower band of the expected price range because again, no one in the market likes it when things move more than they expect, even on the downside. Volatility for TSM is kind of all over the place. It has dropped in recent times and may be starting to rise, but we notice that its rigidness, or its like rapid oscillations, is indicative of like a high volatility, which you never really like to see on a stock. So we're going to keep that in mind as well. Although, truthfully, it's kind of like one of those things you put in the back of your mind and then forget about. But good to know. TSM, interestingly, has quite a overall trend of decreasing short interest, or short volume. So this is the short volume to the regular trading volume. And we see that the trend is decreasing, but recently, definitely a little bit of a spike in these past few days of shorting on TSM. Now, the question always is this shorting kind of true shorting? So, is this shorting, or is this shorting because of hedging requirements? And sneaking ahead a little bit, it's a little bit of a mixed bag here. The options layout for TSM is truthfully a little strange. Typically, you would like to see, so on the left, we have the options layout as they currently exist. And then on the right, we have the change in the options layouts. This, where the bars here represent the change in the options layout from the day prior, and the lines represent the average daily change for the past month. So on TSM, we see that on average for the past month, the at-the-money calls have been opening up, and the out-of-the-money puts have been opening up. But this options layout is odd because typically you would like to see a lot more in-the-money calls than out-of-the-money calls, and this amount of in-the-money puts is slightly discerning as well. Actually, the ideal would be if you switch these two. So if you put this normal distribution style on the calls, and then this tail event, put it in the out-of-the-money tail event on the puts, and you would have yourself a pretty healthy pretty healthy options layout. That being said, since it's opposite, I guess we can say that TSM has a pretty unhealthy options layout right now that isn't really providing us a significant amount of support for the price action. And we're going to see that now as we see that the net delta on TSM is negative 273,000. And although that's not necessarily a significant amount per se, it does tell us that TSM is in a gamma squeeze. And not only is it not being supported, like most stocks are, by the delta and gamma hedging going on, it's actually being destabilized by those options. And we can see that here with the hedging matrix, where we see that for every point decrease in the spot and every point increase in IV, negative 273,693 shares must be sold, or 273,000 shares must be sold. Part of the reason here for this high vol, so we talked about the high volatility, we talked about the unusual options layout, and then the delta hedging. And we see that a good portion of it is probably due to these 95% out of the money dealer long puts, which means that someone or a large group of people, about 261,000 contracts, are profiting from this high volatility. And they're doing so by selling puts. So they're dealer long puts. And these are quite destabilizing, especially if they become in the money, which I think they will be. And also if volatility continues to rise. So, per the traditional deep dive stocks report, TSM is in some very precarious conditions. We see that recently any price appreciations are met with VoEx spikes into the inhibition zone, and that VoEx is currently in the propagation zone, which is statistically relevant for continued price appreciation. Now, what does our new toy, the hedging heat map, have to say? Well, it echoes a lot of what we saw in our report, but it helps us visualize where these buying and selling pressures really get amplified. So the crosshairs indicate the current spot and volatility. The blue indicates purchasing support, and red indicates selling pressure. So we see that TSM is right on the cusp, of its selling, the differentiation between its selling and purchasing forces present on the stock. There is some significant purchasing pressure up here in like 114, but it would have to get there first. And since statistically stocks in a gamma squeeze typically experience negative price action, and all of the snap graphs are showing us negative price action, if we anticipate negative price action, we see that the blue really fades away and turns into red at about 100. So at $100, TSM is going to switch from any purchasing support that it has, which isn't much, right? Because it's negative 273,000. But the gamma squeeze essentially is going to become significantly worse if the price drops down to 100. That's when the red really starts to get amplified. And when this happens, it would be reasonable to expect a runaway sell-off event where it's just like a true traditional hardy gamma squeeze becomes developed, where the lower the price drops, the more selling pressure ramps up, and so around and about we go. So what's cool is that we can see it. We get led to this instability with VoEx, and then mathematically we see with VoEx kind of like deconstructed. We see with the snap graphs that indeed negative returns are anticipated, which matches our visual inspection of VoEx. Then we see that the options layouts themselves are quite unhealthy. Then we see the negative delta indicating it's in a gamma squeeze. And now we have a pretty significant risk event here, and it's showing us just how close we are to this runaway sell-off event. So, pretty exciting. Definitely a stock to keep an eye out on, and Let me know what you guys think. Let me know how you guys play the stock if you do. And that's it for Deep Dive Stocks Data Dive into TSM. Thanks for coming. If you guys like, be sure to comment, like, and subscribe, and I'll see you guys next time. Bye.